Welcome back to the deep dive. We've got quite a stack of sources today, and we're going deep into the U.S. job market, specifically looking at spring 2025, and we'll have a real focus on the tech sector, too. Our mission really is to cut through all of the noise, take this mountain of data, this analysis, and just pull out the crucial bits. We want to give you that shortcut, help you understand what's really happening out there so you feel genuinely informed.
And complex is definitely the word for it. It's not a simple picture that data's painting, not at all. Especially in tech, we're seeing lots of mixed signals. It feels like a market in a strategic transition.
Okay, let's start broad then. The U.S. job market overall in spring 2025. What did that April data really tell us, beyond the headlines?
Well, the headline for April payrolls did look pretty strong. Non-farm payrolls up by 177,000 jobs, better than some expected. But, and this is the key thing, you have to look a bit deeper. That number needs some context. Because the job gains for the first quarter of 2025, they were actually revised down, significantly in some cases. So earlier growth wasn't quite as robust as first thought. If you average it out over the past year, monthly growth is closer to maybe 157,000 jobs a month, more moderate.
Okay, so April was decent, but the trend is maybe cooling a bit.
Exactly. The overall momentum seems to be easing compared to, say, last year. And the unemployment rate, the main U3 number stayed low, historically low at 4.2% in April. The broader U6 rate dipped a bit too, which sounds good, but even there are nuances. Uncertainty around potential federal job cuts, for instance. And interestingly, the unemployment rate for foreign-born workers actually ticked up to 4.2% in 2024. Still low compared to the OECD average, which was 4.9% in March, but it shows different groups are having different experiences.
Okay, now this is where I think it gets really interesting, showing that easing momentum. What about job openings? Are companies still scrambling for workers?
Yeah, this is a critical signal. The JOLTS data, that's a job openings and labor turnover survey for the end of March 2025. Pretty telling. Total U.S. job openings fell to 7.192 million.
7.19 million, okay.
Yeah. And that was the lowest since September 2024. It's a big drop, over 800,000 openings gone since the peak back in November 2024.
Wow, just a few months.
Exactly. And what's really notable is that the decrease from February to March wasn't just in one or two areas. It was across all sectors. A broad decline like that. That strongly suggests employer demand is cooling off.
So for someone looking for a job, what does that mean? Is that acute labor shortage basically over?
It means the market's getting much more balanced. That ratio, the unemployed people per job opening ratio, or UJR, it hit exactly 1.0 in March.
1.0.
Right. For ages, it was way below 1. Many more jobs than job seekers. That fueled the shortage. Hitting 1.0 means, roughly, there's now one unemployed person for every job opening out there.
So not a worker surplus yet, but the frantic hiring is dialing back.
Definitely. The scales are leveling. That intense shortage period seems to be softening significantly. It's a key nugget, really.
And wages, still a huge pressure point.
Also moderating. Average hourly earnings growth year over year eased a bit to 3.8% in April. And that fits with other data, like the Employment Cost Index, the ECI, for Q1 2025. It tracks labor costs for employers. That showed costs easing too, up only 0.9% for the quarter. Slower wage growth, slower labor cost increases.
Yeah.
That's generally welcome news for businesses worried about inflation, right?
Absolutely. Take some pressure off.
So yeah, another sign the market's losing some heat.
Okay, so pulling that all together, the decent April number, but with downward revisions,
Wow.
declining job openings, that UJOR hitting one, moderating wages. What's the overall feeling you get from these numbers?
It feels resilient, on the surface, especially with that April payroll number. But the underlying signals, they definitely show momentum is slowing. Declining job openings everywhere is a big one. It really suggests we're in a transition, the market's balancing out, employers are maybe less desperate, and we might not even be seeing the full impact of some economic headwinds in the labor data just yet. It's certainly not the market it was 6 or 12 months back.
Okay, let's dig a bit deeper. Where are the jobs actually showing up, and where are they disappearing? Which sectors were the engines in April?
Right, so in April, the main growth areas were healthcare and social assistance. That was a big one, plus 58,200 jobs. Transportation and warehousing also added a good chunk, 29,000. And accommodation and food services up 20,600. Professional, scientific, and technical services, which includes some tech-related stuff, had a more modest gain, just 3,500.
Interesting about transportation and hospitality. Are those sustainable gains?
That's a great question. The sources actually flag potential vulnerabilities there. For transportation and warehousing, maybe that Q1 inventory build boosted things, but if imports drop sharply, that could reverse. And for hospitality, there are some early signs that foreign tourism might be down this summer, which could challenge that sector. So yeah, it's not uniform strength. It's kind of an uneven recovery with some future risks.
And where did we see declines in April?
Some sectors did shrink. Non-durable goods manufacturing lost 3,000 jobs. Retail trade was down 1,800, and other services dropped by 1,000. Seeing manufacturing and retail soften, that kind of fits with the broader cooling signs we were just talking about.
So layering on the wider economy, GDP, confidence, policy shifts.
Yeah.
How are those playing into this job market story?
Yeah, this is where the headwinds really come into view. The U.S. economy actually shrank in Q1 2025. Negative GDP growth contracted at a 0.3% annual pace.
Oof, not great.
No. And you couple that with sharp drops in consumer confidence, growing talk of recession, makes for a tough environment. Businesses get cautious about hiring when things look like that. Inflation signals are a bit mixed, but maybe easing somewhat. CPI, consumer prices, up 0.2% in April. But the PPI, producer prices, actually fell 0.5% in April.
So maybe less pressure building up in the pipeline.
Potentially, yeah.
Yeah.
Which is relevant for policy, of course. Then you add in the policy uncertainty. The sources mention worries about trade policy, new tariffs, proposed federal spending cuts, specifically naming that Department of Government Efficiency, the DOGE initiative. Labor data tends to lag these things, so we might not be seeing the full employment impact yet. The sources even mention potential de facto job losses in government, like people put on leave that don't show up immediately.
Right. Okay, let's pivot now and narrow the focus, just like the source material does, right onto the tech sector. It's described as bifurcated. What exactly does that mean? Why is that idea so central?
Bifurcated.
Yeah.
Yeah, that's absolutely the key concept for tech right now.
Yeah.
It means you've got two totally different things happening at the same time, almost like two separate markets within one sector. On one hand, you have intense demand, really high pay for very specialized, often cutting-edge skills. Think, top AI engineers, cyber experts, advanced cloud folks. Those roles are still incredibly hot.
Okay, the high-end specialist.
Exactly. But on the other hand, you've got widespread layoffs continuing, a really tough market for new grads, and shrinking opportunities in more generalist tech roles, or even non-technical jobs within tech companies.
So not just a slowdown, but a real restructuring.
Precisely. It's strategic.
Yeah.
Companies are doubling down on certain high-value areas and, well, shedding roles elsewhere. And you see this bifurcation even in hiring intentions versus what's actually happening on the ground. The sources say 58% of tech leaders plan to hire new full-time people in 2025. Sounds okay, right?
Yeah, it sounds pretty positive on the surface.
But
Yeah.
the immediate reality for April was a net reduction in tech sector staffing, about 7,000 positions lost. An even bigger picture, tech occupation employment, so tech jobs across the entire economy, not just in tech companies. That fell by an estimated 214,000 in April.
Whoa, 214,000. That's a huge number for 1 month.
It is. And that stark contrast hiring intentions versus actual job losses really shows companies aren't expanding broadly. They're making very selective, very targeted bets.
And that tough environment for new grads you mentioned, is that tied directly to this, the shrinking generalist roles?
Absolutely. Hiring for recent grads in tech is just plummeted. We're talking over 50% down for big tech, over 30% for startups compared to pre-pandemic levels. Big tech, if they're hiring grads, they're focused narrowly. ML, data engineering, and the shrinking non-technical roles. That hits early career folks hard, people who might have entered that way.
But wait, despite the net job losses, aren't there still loads of tech jobs posted online? How does that fit?
That's the other side of the coin, the other part of the bifurcation. There is still demand in absolute numbers, no question. Job postings data. Yeah, it showed a modest dip in April, but companies still added nearly 203,000 new tech listings that month.
200,000 new ads.
Right. And total active listings were still high, at almost 450,000. So companies are trying to fill roles.
Just very specific roles.
Exactly. It's concentrated demand. And even within postings, you see cooling in certain areas, like research postings, down 18% since January, way below pre-pandemic levels. That might be linked to companies pulling back on R&D spending, or maybe those federal funding cuts hitting research-heavy roles. It's not uniform demand at all.
So the big takeaway is demand hasn't vanished. It's just dramatically shifted. Where is it strongest? What skills are gold right now?
If you've got skills in the right spots, you're in a really strong position, despite everything else. The top areas are consistently AI and machine learning, cybersecurity, data science and analytics, cloud engineering, and also green technology. That's where the strategic money is going.
And AI, that seems to be the loudest buzz.
Oh, it's staggering. Look at the numbers. Around 60% of U.S. tech managers plan to hire AI engineers this year. That's nearly double the rate from 2024. Overall demand for AI skills predicted to jump 20% year over year, and new job postings mentioning AI, up 184% year over year in April. Over 55,000 postings.
184%. Incredible.
Yeah. AI-specific roles are now over 8% of all U.S. software postings. It's huge.
Is that just needing PhDs in machine learning, or is it broader?
Much broader. AI isn't just creating niche expert roles, it's changing existing jobs. Like software engineers, they're now expected to use AI coding assistants, co-pilots. The sources talk about the rise of the AI-powered generalist engineers who can use AI tools effectively across different tasks without needing deep ML theory. And yes, totally new job categories are popping up. AI governance leads, AI ethics specialists, privacy experts focused on AI. It's a whole new skills landscape.
Fascinating. And cybersecurity,
Yeah.
still critical.
Absolutely critical, driven by rising threats, some maybe even AI-powered, and that massive global shortage of skilled cyber professionals. Was it like 5.5 million gap?
Yeah.
Huge demand.
Any other roles consistently popping up?
Yeah, the sources also mention DevOps engineers, full-stack developers, UX/UI designers, product managers, and network and systems administrators as still being pretty consistently in demand.
You mentioned AI handling routine stuff. Does that make the soft skills even more important now, the human element?
Totally. As AI automates, the uniquely human skills become the differentiators. Things like analytical thinking, adaptability, creativity, complex problem solving, proactive agency-taking initiative. Those are hard for AI to replicate. And basic AI literacy, understanding how it works, how to use the tools, that's becoming table stakes for many roles, not just the super technical ones.
And this focus on skills, is that changing how companies hire? Less about degrees?
Yes, big time. We're seeing a real rise in skills-based hiring. Employers using assessments, looking at portfolios, not just relying on degrees or keywords. About half of tech job postings in April didn't even require a 4-year degree, according to the sources.
That's a huge nugget for job seekers.
It is. It opens doors for people from non-traditional backgrounds. But it also means competition is based more purely on what you can do. Proven skills are king.
What's the latest on the remote versus office tug-of-war in tech? Still a battleground.
Oh yeah, still a major point of tension. The data suggests only about 18% of new tech jobs in 2025 are expected to be fully remote, which clashes pretty hard with what employees want. Nearly half of tech workers said they'd think about quitting if forced back full-time.
18% versus almost half wanting flexibility. Big gap.
Huge gap. Now, remote software postings were stable-ish, around 27% in March, so remote and hybrid are definitely still out there. But lots of companies are pushing for more office time. 3 days a week seems common, some are even going for 5. This mismatch, it's critical for attracting and keeping talent right now.
Any interesting geographical shifts? Are tech jobs spreading out or still clustered in the usual places?
It's a bit of both, actually. The traditional hubs, SF, New York, they still dominate for that really cutting-edge AI talent, the deep research stuff. But there is evidence that broader software roles are decentralizing. States like North Carolina, Delaware, Louisiana saw notable growth in software postings in March.
Interesting. Lower-cost states, maybe? Linked to remote work.
Seems plausible, yeah. A shift towards lower-cost areas, possibly enabled by some level of remote or hybrid flexibility. On the flip side, the Washington, D.C. metro area saw a big drop in tech postings, down 17% between January and May. That seems driven by cuts in admin, HR, accounting, research roles, often linked to federal funding or contracting. So policy changes, like that DOGE initiative, can really impact regional tech employment.
Okay, let's tackle the elephant in the room. Layoffs. Still a major feature of the landscape. How does tech compare?
Layoffs are definitely still a significant factor, and not just in tech. Looking broadly across the U.S. economy, Challenger Gray and Christmas data showed over 105,000 cuts announced in April 2025. Now, that was down from March, but it was up sharply 63% compared to April last year. Highest April total since 2020, actually.
So more turbulence this year overall.
Much more. Year-to-date through April, over 602,000 cuts across all industries. That's an 87% increase from the same period in 2024. Big jump. And tech has been one of the leading sectors for those cuts. Right up there with government where, again, that DOGE initiative gets cited: retail, healthcare, and nonprofits.
And the reasons cited? Mostly the economy.
The biggest single reason cited across all industries, interestingly, was DOGE actions. Almost half the cuts through April. After that, yes, economic conditions, cost-cutting, restructuring, market conditions.
Okay, back to tech specifically. What's the scale of tech layoffs we've seen just in 2025?
It's substantial. By mid-May 2025, the tracker showed over 61,300 tech employees laid off across more than 130 companies just this year.
61,000.
Yeah. And CompTIA's analysis really highlights the impact. Tech sector companies cut about 7,000 net jobs in April. But remember that bigger number, tech occupation employment across the whole economy, down 214,000 in April. And the tech unemployment rate itself rose from 3.1% in March to 3.5% in April.
So it's hitting tech roles everywhere and more tech people are unemployed.
Exactly. It confirms the pain isn't just confined to the big names, it's broader, and it is resulting in higher joblessness for tech professionals.
Can you give us some examples? Which major companies made cuts this year?
Sure, the sources listed quite a few prominent ones. Microsoft, about 6,000 in May, hitting support, admin roles. Intel had huge cuts, 22,000 year-to-date, mainly semiconductors. Meta cut 3,600 YTD, described as performance-related, hitting HR recruiting. Google has been doing what the sources call quiet layoffs, smaller, rolling cuts across different areas, like 200 in their global business org in May, plus earlier cuts in Pixel, Android, Chrome, Cloud, HR, recruiting.
That sounds unsettling, the quiet layoff approach.
It can definitely foster uncertainty.
That's right.
Not one big announcement, but ongoing adjustments. Others mentioned Amazon, around 100 recently in devices after earlier AWS cuts. Salesforce, about 1,000, citing an AI pivot. Block, over 900, also AI focus. Workday, 1,750, focusing on profitable stuff. CrowdStrike, 5%, profitability. IBM, hundreds in Radman, linked to AI automation. Automatic, 281, shifting to large language models. Chegg, 248, blooming AI disruption.
Wow, it really spans the sector. And the reasons, it's more than just the economy, right? What are the core drivers for tech?
They're definitely more complex. First, yes, the macroeconomic volatility, the economic uncertainty, high rates, inflation fears, recession worries, that drives general cost cutting. Second, that post-pandemic correction, the right sizing after hypergrowth hiring. But the really big one, the transformative one, is the AI revolution and strategic pivots to AI. This is huge.
How so? Two sides to it.
Exactly. One, companies are restructuring to invest in AI. Cutting in some areas to free up cash and headcount for AI talent and projects. It's reallocation. Two, AI automation is starting to genuinely reduce the need for certain roles. Routine coding, content generation, customer service, some HR tasks. AI is starting to take those on. It's changing who is needed.
So reallocation and automation pressure.
Right. Plus, you still have general operational efficiency drives, restructuring to flatten things out, and companies shifting focus or sunsetting older products. And budget cuts affect some, especially R&D or government-reliant firms.
Okay, let's zoom right in on the very recent past, the last 30, 60, 90 days. The sources looked closely at March, April, May 2025, where tech layoffs clearly trending upwards month on month.
And this is where it gets nuanced. The data doesn't show a simple, straight upward line in the volume of layoffs month after month. It's more volatile. If you look at the number of employees impacted each month, tracked by Peerlist, March was high, around 15,500. April dropped way down, about 4,100. Then May popped back up to roughly 9,100, driven largely by that Microsoft announcement.
So up, down, then up again. Not a steady climb.
Exactly. Very lumpy, depending on when big companies make their move. One large cut can skew a single month's total. Now, if you look at the number of companies making announcements, again from Peerlist, you see a different pattern. March had 30 companies cutting. April had 25. May had only 16 as of late May.
Okay, so the number of companies initiating cuts actually trended down over those 3 months?
It seems so, yeah. But then you look at the tech unemployment rate from CompTIA. That did go up from 3.1% in March to 3.5% in April.
So fewer companies making cuts maybe, but the actual unemployment rate for tech folks went up. How do we square that?
It just highlights the complexity, I think. The monthly volume of employees hit is jumpy. The number of companies cutting might have eased slightly very recently. But 70T, the rising unemployment rate, confirms the job market did get tougher for tech professionals between March and April. And we can't forget the year-to-date tech layoff total is still way higher than last year, and tech is still a top sector for cuts overall.
So the takeaway isn't that the pressure is off.
Definitely not. The pressure is still very much on. The risk is there. That unemployment rate increase is telling. It suggests it's taking longer for laid-off tech folks to find new jobs. It's all tied back to those AI pivots, efficiency drives, and the broader economy. Focusing just on month-to-month volume can be misleading.
Looking forward then for the rest of 2025, what's the general vibe from the sources? What's the outlook?
Cautious seems to be the word. Hiring likely stays careful, maybe not the frenzy of before. That intense focus on specialized skills, AI, cyber, cloud, that's expected to continue, absolutely. Layoffs might carry on, but maybe, possibly, slow down from the earlier peaks. There's some cautious optimism maybe for stability later in the year if what the sources call the hesitancy hangover lifts.
Meaning if companies start moving on projects they paused.
Exactly. If stalled projects get greenlit, that could definitely boost demand for specific kinds of talent again. But it's still a bit of a wait and see.
The sources talk about new rules emerging for tech employment, driven a lot by AI. What are these fundamental shifts people need to grasp?
Yeah, these new rules are really key takeaways. First, AI fluency and adaptability. Understanding AI, using the tools, is becoming essential even if you're not an AI specialist. Constant learning, upskilling, like
Yeah.
being in permanent beta.
Right. Can't stand still.
Nope. Second, skills-based hiring is becoming dominant. What you can do, your portfolio, matters more than just the degree. Third, the rise of AI-powered generalists, engineers who effectively use AI tools to boost their work across the board. Fourth, emergence of new roles. Totally new categories like AI governance, AI ethics, agentic AI engineers, roles managing the impact and deployment of AI.
Agentic AI, interesting.
Yeah. Fifth, probably more fractional work and contract talent, using experts for specific projects for flexibility cost management. And sixth, evolving work models. Hybrid is likely dominant, but that tension with office mandates isn't going away. And underpinning all this, as AI handles routine stuff, the value of uniquely human skills just skyrockets. Critical thinking, creativity, complex problem solving, emotional intelligence, strategic oversight, those are the real differentiators now.
So putting it all together, this complex, changing scene, what should employers and job seekers actually do right now? What are the key strategies?
For employers, the sources stress strategic hiring for those scarce high-demand skills, AI, cyber. But just as importantly, investing heavily in upskilling and reskilling their current employees, that's vital. Also, embracing flexible hiring contract, skills-based, managing that remote hybrid tension thoughtfully, and clear communication, especially during restructuring.
And for individuals, job seekers, people already in tech.
The message is adapt. Prioritize learning those high-growth skills, AI, ML, cyber, cloud, data. Build up those uniquely human soft skills. Create a portfolio that shows what you can do. Network like crazy. Be open to contract or fractional work. Look at tech roles outside pure tech companies. Every industry needs tech now. And keep learning about those new AI-related roles emerging. Continuous learning is the name of the game.
Okay, so wrapping up this deep dive, the key takeaways seem to be the overall U.S. job market. Resilient, but definitely cooling under the surface. Declining openings are a big sign.
Right. And tech. Clearly bifurcated. Hot demand for specialists, but cuts and challenges for generalists and new grads.
The recent layoff trend, volatile, not a simple climb, but tech unemployment did rise March to April, and year-to-date cuts are way up. Tech's a major area for cuts overall.
And fundamentally, AI is the game changer. Reshaping jobs, creating new roles, demanding new skills. Those new rules are real, and adaptation is crucial for everyone.
Which brings us to a final thought for you to chew on. If AI is taking over routine tasks, and the market values skills and human capabilities more, what does a truly future-proof career look like? Is it less about chasing specific job titles, and maybe more about building a core of adaptable tech skills combined with those irreplaceable human strengths? Using tech to enhance what makes us valuable and not just worrying about being replaced. Something to think about. Thank you for sharing the sources that powered this deep dive. Keep exploring, keep asking those questions. We'll catch you on the next Deep Dive.